This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. Looks like some of the gains linked to better than expected corporate earnings, but also, strangely enough, some of the strength, I believe, is linked to weaker than anticipated economic reports today. We did have jobless claims coming in higher than expected. We did have pending home sales coming in very weak. Also, we had parts of the gross domestic product report coming in on the weak side as far as inflation and spending is concerned. So stock index futures putting in a very good performance. I think what we are seeing is growing evidence that the Fed may be forced to what I call taper the taper. I think they're going to have to halt the scale back of their plan to reduce their quantitative easing program later this year. So it still looks like the good news on the economy, and when we do get it, helps stock index futures, and the bearish news on the economy, as we have seen in most of the reports today, is also bullish from an interest rate point of view. So from here, stock index futures are higher now. I think they will continue to advance today and longer term. Over in the currencies, seeing the dollar index a little bit better. This being supported by the Fed's announcement yesterday to taper their QE by $10 billion per month to now $65 billion per month. We were a bit friendly on the dollar index in anticipation of the taper news, which we did get. We now have to be just neutral to dollar with that bullish news out of the way. Seeing some pressure in the euro currency. This after inflation numbers in Germany coming in weaker than expected, actually down 0.6%. The guess was down 0.5%. Also seeing some weakness in the pound. This after a series of reports showing weak UK bank lending statistics. The Australian dollar a little bit better, which appears to be short covering, but we continue to be bearish on the Aussie dollar, and our next downside objective is 85 cents. Over in the interest rate markets, futures a little bit lower, a lot of cross currents, some of the pressure linked to flight to quality longs being liquidated. Also, we have some of the pressure due to the heavy slate of supply this week, with the Treasury selling $111 billion in securities this week. So fundamentals seem to be mixed. Some strength off the lows with these weak economic reports. So seeing a lot of cross currents in the Treasuries, and I think I would stand aside there, focusing on the long side of stock index futures and the short side of the Australian dollar. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.